Good morning. Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's quick morning call. It's always a little late on a Friday. Well, the jobs number came out and it's over with. They were mixed. Some people are saying it was good. Some people were saying it was bad. We went from 9.1 down to 9, but then, the whole payrolls number was a bit soft. But whichever way you want to slice it, we have to watch the action today because today's an important day. We had a nice two-day snapback. That 38.2% retracement held. And not only did it hold, you also had a nice two-day bounce that basically put us right back above that accelerated uptrend break. And the best part about it was there was a lot of nice setups that we talked about in yesterday's morning call that triggered, and I see a lot of patterns of stocks that we are very familiar with setting up for a juicy type of trade. So let's just get right to it. If you take a quick look at the S&P or the SPX, you will see now, this was the level that we isolated. This was that 38.2% retracement that held. Okay, you had a few chances to buy it down there, within the day after, and yesterday you had a nice follow-through day. So if you want to just fragment this a little bit more, you'll see that you had two big down days. So we wanted to see if it would control the next direction, and if it would have controlled the next direction, it probably would have never have came back above halfway in this, or it would never have taken back more than 50% of these 2 days, which it did. So that kind of negated the strength of this short term. So at this point, things are looking pretty constructive. What I like to see today, we're down like 70 cents in the spiders. I'd like to see this 1240 hold. If 1240-ish can hold and we could go a bit sideways, I think the market for the bullish case is looking a lot better. Plus, you overlap that with some stocks and some different sectors for cash flow as well as investments. You have a lot going on here. Yesterday we talked about, two quick active cash flow trades that could have triggered. One did, and one can still go today. Netflix, remember we talked about that, showed you how it was a broken stock, but not broken for us. This was that lower range, mentioned that if it gets into this gap, which I love playing stocks into gaps, and this is the reason why above 85 was also on your price point sheet, you could have a nice cash flow trade, and it went to 92.29. This is a nice trade. I understand that it broke below this range. I understand it came all the way from 200 and change, but that's not our problem. This is a nice opportunity, and this one worked pretty well yesterday. So today, not as juicy of a trade, but it's opening down a little bit. If it were to trade through yesterday's high of 92.60, you probably get another cash flow trade, but obviously after these 2 days, it gets a bit more tricky, but there's probably room to about 101. The other one in that same type of scenario was Amazon. Amazon did not trade as well, but it's also not as heavily shorted. It's not the same dynamic, but this one I'm going to watch today. It's down a little bit. It was also actually upgraded today. If it can get above this, what is this, about 218, you could probably see a nice $4 move or $2 to $4 move, depending on what you want to get out of it to fill a bit more of this gap. So that's a nice little setup here if it goes from negative to positive. And then Apple and Google, they're held again. They're frustrating everyone, but they're just basing for now. And at some point, if you don't get too frustrated when the trade does trigger, I think there's going to be some juicy action. So if you look at Apple, I broke it down into this box type range. Okay, said yesterday, it's not going to be able to break above this 409 yet, but maybe there's a trade to fill this gap. So that's why I drew this line. So yesterday, I think some guys took advantage of it when it went through 400. Nice little $3 trade. Okay, not a blockbuster, but it's another thing to do. That's what we do as professional traders, look for things to do. If you're an investor, you still have to sit and wait. If you're a trader, there are some patterns. So now it's opening down a little bit. I'm going to look to see if it goes negative to positive, and then, if it can get through yesterday's high of 403.40, perhaps you get a little bit more upside. So that's another nice setup today. Google, nice setup also. Look at this. I drew these all my lines from yesterday because I had to leave yesterday. This was that area of, what was this? This was 587. So I said maybe we can't get a trade to out of this range to highs, but we can get a little micro trade here to fill this gap. And not only did it fill the gap, it went even higher. So now you're at 597.50. So little trades in here, obviously not blockbusters, but certain tiny tactical moves in order to make cash flow to have it add up for your month. If you're a macro investor in Google, you're probably sitting just fine because this is not a lot of movement for a big stock like this. Still holding its big gap up after a big move into earnings. So if you're an investor and you've been holding it for a while, at some point it feels like it's going to break above this 602 and go, and you'll be rewarded. IBM traded down to that uptrend again and held. If you look here, I know a lot of people are trying to use this as a macro trade. Still looking good. I drew this line. It's been holding it each and every time, and now it's looking to knock on the door to new highs. If you're an investor, congratulations. As a trader, I think if it gets above this about 188, you could get a nice, powerful move. I think it should digest a day or so, but it doesn't have to, considering it just went 3 days in a row. So a little sideways action would make this a better trade for us with a bigger platform to get through. As far as CF yesterday and some of the ag, CF again was explosive, had earnings, reversed, went positive, took off, and then yesterday went through my other price pattern. If you look here, this was earnings day. I drew this line yesterday, guys. That's why I draw these lines. These are your action areas. So went through 170, went to 174. Nice trade. This is a leader in that group. I think even the banks had a decent day yesterday. They pulled in more than the other sectors, but rightly so. They're the problem area. They're the MF Global. They're the potential write-off of all this debt that people don't know exactly what ratio it's going to be. But if you look at the XLF, you'll see that it came down to the 38.2%, held. It trickled a little bit below it. Didn't reach the 50%. I was thinking it might even get there, and it turned up. So as far as the banks, still still constructive. And now at least you have a new area or a new point of reference around 13 to say I could be long versus this instead of a lower level, which this was that level the last time. So some things going on here. Let's see what Goldman did yesterday. Goldman closed near the highs of the day. Wow, it really reversed and took, actually, but look at this. This stock hit the support that we drew, okay, and then reversed, closed pretty strong, engulfed these 2 days, and maybe if, this is in the game to fill this gap. So if you're looking to buy something on this dip here, maybe Goldman shows some relative strength. We could buy it and add through 108.71 for a move back to 110, 112. So that looks okay. LinkedIn came out with numbers. It's down $7. See if they, if they try and discount it or ignore it and it can go up. I'm not going to really trade that. I know Groupon's coming out today. A lot of people are very excited about it. Everyone knows the art of the first day for an IPO. I'm going to just give you an if-then statement because this is how we do it. A lot of guys have really big days if an IPO works out like it did with LinkedIn or like it did with Yandex or like it did with some of these others, if it follows the same pattern. I think it's priced at 20. So I'm going to give you, for instance, just say they open it up at 45. Real quickly at 45. It spurts to like 47, and then it pulls back down to just say like 43. Typically, it'll hang out there for a little bit. Okay, once it hangs out there and then trades off that low, you now know where it just put in its pivot low, 43. So you had a flash to 47, but really the opening was around 45. So just say it goes back to 44.50. Once it crosses 45, then that's your entry. You get in at 45, you then have your stop at 43, you have a $2 risk, you better have your hands on the keyboard because it moves very, very fast. And then if it continues to be strong, your next add is when it goes through that 47, because obviously if it's going to go to 50, it's got to go through 47. If it's a hot IPO and the momentum stays there, then that's your add. And then, it could be a move of $5, $10, who knows? It's a very thin, very controlled deal, and I hear it's very tight. So let's see how it trades. You'll remember what happened with LinkedIn. I think in my head, it opened up at like 86, went to 89, pulled into 83, and then once it went back above 89, that was your buy. Then it went to like 94, hovered, and then above 94, remember, it went to 120. I'm not saying that's going to happen that way, but that's how you trade it. So there's usually 2 days of a lot of attention and a lot of momentum, and if you trade it with the right calculated strategy, those 2 days could be very rewarding, and today is day one. So let's see how it trades, and Sperling is the master IPO trader. For me, it gets a little risky, so I do trade them, but I don't trade them as crazy or as heavy as he does. So if you want to trade Groupon, make sure you're listening to his radio. So once again, I think there's going to be opportunity today. Futures are down a bit. Don't get too aggressive, but there are a lot of setups that are getting stronger, a lot of patterns that have been building, and we're still in a pretty constructive mode here in the markets, considering after the best month in October, we held the top 2/3 of that, meaning we only pulled in a third. So that showed you some commitment, but the speed is just a little bit different. Keep changing with the trade because it always changes, and if you change along with it, you could embrace it. Scott Redler, T3Live, the morning call. See you at the recap. Have a great day trading.